Given the bullish price forecast for Bitcoin and the potential for reaching the resistance level, the investment strategy suggests a long position. The entry price should be set at $97,900, allowing you to buy in before the price potentially surpasses the resistance. To manage risk, a stop-loss order at $92,300, the identified support price, will protect your investment from significant losses if the market turns bearish. The target price for this strategy is $104,000, based on the forecast and aiming to capture a substantial portion of the potential upward movement. This long-term investment perspective is justified by the positive price momentum indicated by both the historical price data and the forecast. The entry price allows you to participate in the upward trend while the stop-loss minimizes potential downside risk. The target price provides a clear profit objective, aligning with the bullish market outlook. By adhering to this strategy, investors can aim to capitalize on the potential growth of Bitcoin in the coming weeks. Given the price trends and forecast for Ethereum, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a fluctuating trend with a slight upward bias, with the current price hovering near the resistance level of $3,393.05. The forecast suggests Ethereum could climb from its current price towards $3,640, indicating potential for growth. In this scenario, a long position is advisable to capitalize on the potential for a price increase. An entry price of $3,370 would be a suitable starting point, aligning with the current price and providing room for potential appreciation. The stop-loss should be set at $3,240, a level below the recent lows, to protect against significant price drops. The target price should be set at $3,550, aiming to capture a substantial portion of the anticipated upward movement while leaving some room for potential further growth. Given the price trends and forecast for Ripple, a moderately aggressive investment strategy would focus on a medium-term approach. The historical prices show an upward trajectory, with the current price close to its forecast and near the support level of $1.119. The resistance is at $1.4704, indicating that there is still some room for upward movement. However, the recent price action suggests a potential pullback before continuing the upward trend. Therefore, entering a long position at a slightly discounted price would be advantageous. A suitable entry price for this strategy would be $1.35, allowing you to buy in after a potential pullback but still capitalize on the upward momentum. The stop-loss should be set at $1.25 to protect against a deeper decline, while the target price should be $1.55, aiming to capture a significant portion of the potential upside movement. This strategy balances risk and reward, allowing you to participate in the bullish trend while mitigating potential losses. Based on the provided price history and forecast for Solana, a medium-term investment strategy appears most suitable. The historical price data reveals a clear upward trend, with the recent price hovering around the support level of $239.74. This suggests a potential for further growth in the near future. The forecast prices indicate a continued upward trajectory, with Solana potentially reaching $280 within the next week. Given this outlook, a long position on Solana is recommended. An ideal entry point would be around $245, slightly below the current price, allowing for some room for price correction. The stop-loss should be set at $239.74, the support level, to minimize potential losses. The target price could be set at $270, providing a healthy profit margin while allowing for some room for further price appreciation. This medium-term approach allows for capitalizing on the anticipated price increase while managing risk effectively. Given the price trends and forecast for Cardano, a moderately aggressive investment strategy would focus on a medium-term approach to capitalize on the anticipated upward momentum. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near its forecast and the support level. The resistance level suggests there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An ideal entry price would be around 80 cents, aligning with the current price and the forecast. A stop loss should be set at 75 cents, below the recent support level, to protect against any unexpected price decline. The target price should be set at $1.05, slightly above the highest forecast price, allowing for potential upside while providing a reasonable profit margin. This medium-term strategy allows for potential gains from the anticipated price increase while mitigating risk through a well-defined stop loss. Based on the provided price information for Coin, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, with recent fluctuations around the $3.50 level. The forecast predicts continued upward movement, reaching around $3.80 within the next week. This suggests potential for capital appreciation in the short to medium term. Considering this, a long position is recommended. An entry price around $3.55 would allow for buying at a relatively low point within the current range. The stop loss should be set at $3.40 to limit potential downside risk. The target price can be set at $3.75, aiming to capture a significant portion of the predicted price increase. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the provided price history and forecast for Filecoin, an investment strategy leaning towards a long position appears more suitable. The historical data shows a general upward trend, with the price consistently rising over the past 2 weeks. This upward momentum is further supported by the forecast, which predicts continued price growth in the coming week. The current price is hovering near the support level of $5.24, suggesting a potential buying opportunity. Therefore, an aggressive strategy could involve entering a long position at the current price of around $5.35. A stop loss could be placed at $5.24 to limit potential losses if the price unexpectedly drops below support. The target price could be set at $5.734, the resistance level, aiming to capitalize on the anticipated price increase. This strategy capitalizes on the bullish sentiment and aims for a short to medium-term profit. Given the price trends and forecast for Theta network, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations around the $1.70 mark. The forecast predicts continued growth, reaching up to $2.20 over the coming weeks. This suggests a bullish outlook for Theta network in the medium term. Therefore, I recommend a long position in Theta network. A strategic entry price could be around $1.75, slightly below the current price, allowing for a potential entry point with room for price appreciation. To manage risk, a stop-loss order should be placed at $1.65, below the support price of $1.645. The target price could be set at $2, aiming to capitalize on the anticipated price increase while staying below the predicted resistance level of $2.237. This strategy allows for potential profits while mitigating risk in a potentially volatile market. Based on the provided price information for Dogwifhat, a short-term investment strategy appears most suitable. The 2-week price history demonstrates some volatility, but the forecast suggests a slight upward movement over the next week. The current price is hovering near the support level, indicating a potential for a bounce. Therefore, a long position is recommended. An entry price around $3.25 would allow you to capitalize on this potential upward movement. Setting a stop loss at $3.15 would protect against unexpected downward price swings. The target price could be set at $3.45, aiming to profit from the forecast's projected increase. This strategy balances risk and potential reward, taking advantage of the short-term bullish outlook for Dogwifhat. Given the price trends and forecast for Stellar, a long-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a consistent upward trajectory, with the recent surge towards $0.532 highlighting strong bullish momentum. Although the forecast suggests a slight pullback in the short term, the overall trend remains positive, with prices projected to reach 66 cents within the next few weeks. This long-term bullish outlook suggests that Stellar presents a compelling investment opportunity for those seeking sustained growth. Therefore, a long position is recommended with an entry price around 45 cents. This price point offers a good entry point below the current market price, allowing for potential profit as the price moves towards the projected target of 66 cents. To manage risk, a stop-loss order should be placed at 40 cents, ensuring that losses are limited in case of an unexpected price drop. The target price should be set at 66 cents, aligning with the highest forecasted price, allowing for substantial gains as the market progresses towards the projected peak. Given the price trends and forecast for Starknet, a moderately aggressive investment strategy would focus on a short-term approach to capitalize on the anticipated upward momentum. The historical prices show a consistent upward trajectory, with the current price close to its forecast and near the support level of $0.574. The resistance is at $0.697, indicating that there is still some room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An ideal entry price for this strategy would be $0.575, slightly above the support price, to minimize risk of a sudden drop. The stop loss should be set at 55 cents, below the recent lows, to protect against unexpected price reversals. The target price should be set at 68 cents, a conservative target that allows you to exit near the resistance level, ensuring you lock in profits before a potential pullback. This strategy balances risk and reward, aiming to capitalize on the bullish forecast while mitigating potential losses. Given the price trends and forecast for PENDLE, a cautious investment strategy would focus on a medium-term approach to capitalize on the anticipated price increase. The historical prices show a slight upward trajectory, with the current price hovering near the support level of $5.146. The forecast suggests PENDLE could rise to $5.78 in the coming weeks, indicating a bullish outlook in the medium term. This suggests a long position is advisable to capitalize on the potential for a price increase towards the resistance level of $5.924. A suitable entry price would be $5.25, aligning with the historical price and providing a buffer below the support level. The stop loss should be set at $5.15 to protect against any unexpected price decline. The target price should be set at $5.65, allowing you to take profits before the price reaches the resistance level, ensuring you lock in gains while leaving room for further potential growth. This strategy balances risk and reward, allowing you to participate in the potential upside of PENDLE while mitigating potential losses. The provided price information for Render suggests a bullish trend. The historical prices demonstrate a consistent upward movement, and the forecast indicates continued growth over the next week. Given this positive outlook, a long-term investment strategy is recommended. This approach allows you to capitalize on the potential for long-term price appreciation. To execute this strategy, consider entering a long position at the current price of approximately $8.03. Set a stop loss at $7.64, which is the recent low point, to protect against potential downside risks. Aim for a target price of $9.11, aligning with the highest forecasted price, to maximize potential profits. This strategy leverages the positive price momentum and aims to capture significant gains as Render potentially continues its upward trajectory. Given the price trends and forecast for VeChain, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a clear upward trend, with recent price increases and the forecast indicating continued growth over the next week. The support price sits at $0.04157, providing a solid base for potential price increases. The resistance level at $0.0481 suggests there is still room for upward movement. Therefore, a long position on VeChain with a target price of $0.0475, slightly below the resistance, seems prudent. The entry price should be around $0.043, allowing you to buy in near the current market price while benefiting from potential upward momentum. The stop loss should be set at $0.0418, slightly below the support level, to minimize potential losses. This strategy allows you to capitalize on the positive price trend while managing risk effectively. Based on the provided price history and forecast for Binance Coin, a bullish investment strategy seems appropriate. The historical data shows a general upward trend, with recent price fluctuations suggesting consolidation rather than a significant reversal. The forecast also indicates continued upward momentum over the next week, with prices projected to reach above the current levels. Therefore, I recommend a long position in Binance Coin. An entry price around $630 could be considered, taking advantage of the current price near the support level. The stop loss should be set at $620 to limit potential losses in case of an unexpected downward movement. The target price could be set at $670, aligning with the resistance level and allowing for a substantial profit potential if the bullish forecast plays out. This strategy focuses on capitalizing on the short to medium-term upward trend of Binance Coin. Based on the provided data for Conflux, a bullish investment strategy appears promising. The historical price data reveals an upward trend, with recent fluctuations around the 16 to 17 cents range. The forecast indicates continued growth, projecting prices to reach $0.196 within the next week. This positive outlook, coupled with a support price of $0.1731, suggests a strong foundation for potential gains. Therefore, I recommend a long-term investment strategy with an entry price at 17 cents. A stop loss at $0.165 would safeguard against unexpected price drops. The target price should be set at 19 cents, aiming to capitalize on the projected price increase. This strategy allows for a measured approach, taking advantage of the bullish sentiment while mitigating potential risks. Based on the provided information for Worldcoin, a short-term bullish investment strategy is recommended. The historical price data shows a fluctuating trend, but the recent upward movement, coupled with the forecast indicating continued growth, suggests an opportunity for profit. The entry price should be set at $2.44, near the recent support level, allowing for a potential price increase towards the forecast price of $2.55. To manage risk, a stop-loss order should be placed at $2.39, slightly below the support price, ensuring that potential losses are limited. The target price should be set at $2.60, aiming to capitalize on the anticipated upward momentum and capture a reasonable profit margin. This strategy allows for a quick entry and exit, taking advantage of the short-term price fluctuations in Worldcoin. Given the historical price data and the provided forecast for Avalanche, a medium-term investment strategy appears most suitable. The historical prices demonstrate a consistent upward trend, indicating bullish sentiment. The forecast reinforces this outlook, projecting continued price growth over the next week. While the support price of $35.47 provides a safety net, the resistance level of $43.17 suggests potential for further upside. Therefore, a long position is recommended for a medium-term investment strategy. A suitable entry price would be around $40, allowing for a buffer from the current price and potential short-term fluctuations. The stop loss should be set at $36 to protect against unforeseen price drops. The target price could be set at $44, aiming to capitalize on the projected price growth and reach the resistance level. This strategy balances risk and reward, capitalizing on the bullish outlook while mitigating potential losses. Based on the provided price information for Jupiter, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend with a recent dip, while the forecast suggests a slight upward movement. Considering this, a long position could be considered, aiming to capitalize on the potential increase towards the resistance level of $1.1889. An entry price around $1.13, aligning with the recent price action and below the forecast high, would be advisable. A stop loss at $1.07, slightly below the historical low and the support price, would protect against significant downside risk. The target price could be set at $1.18, aiming to capture a portion of the potential upward movement before reaching the resistance level. Based on the provided price history and forecast for EOS, a medium-term investment strategy appears most suitable. The historical prices demonstrate an overall upward trend, with recent fluctuations suggesting consolidation. The forecast predicts continued growth, reaching a high of $0.968 in the coming weeks. This indicates potential for capital appreciation within a medium-term horizon. Considering this outlook, a long position is recommended. An ideal entry price would be around 76 cents, aligning with the current price and providing room for growth. A stop-loss order should be placed at 67 cents, safeguarding against potential downside risks. The target price should be set at 92 cents, aiming to capture a significant portion of the anticipated price increase. This strategy balances risk and reward, capitalizing on the positive price momentum while mitigating potential losses. Given the price trends and forecast for TRON, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate an upward trajectory, and the current price is near the forecast and close to the support level of $0.1601. The resistance level of $0.2119 indicates potential for further price increases. Entering a long position at the current price of approximately $0.205 allows you to capitalize on this potential upward movement. To manage risk, set a stop loss at $0.195, slightly below the recent support level. This will limit potential losses if the price unexpectedly drops. A target price of $0.211, slightly below the resistance level, provides a reasonable profit objective. This strategy allows you to capitalize on the bullish momentum while mitigating potential risks. Based on the provided price history and forecast for SE, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a general upward bias. While the recent price has dipped slightly, the forecast suggests a consistent upward trajectory over the next week, reaching prices above the current level. This indicates a potential for growth in the coming weeks. Therefore, an investment strategy for SE should involve a long position. A suitable entry price would be around $0.517, the current price, allowing for immediate participation in the anticipated upward movement. A stop-loss order should be placed at $0.483, the recent low point, to limit potential losses. The target price should be set at $0.686, the highest forecasted price, aiming to capture a significant portion of the anticipated gains. This strategy balances risk and reward, allowing for potential profit from the expected price increase while mitigating losses through a well-defined stop-loss order. Given the provided price history and forecast for Shiba Inu, a cautious long-term investment strategy appears most suitable. The historical price data shows a period of consolidation around the $0.0000250 price level, with recent fluctuations within a tight range. While the forecast suggests a slight upward movement, the price remains below the resistance level of $0.0000258. This indicates a potential for gradual growth, but also highlights the need for patience. Therefore, a long position is recommended with an entry price around $0.0000247, aligning with the current price range. The stop loss should be set slightly below the recent support level at approximately $0.0000238 to minimize potential losses. The target price can be set at $0.0000258, aiming to capitalize on a potential breakout above the resistance level. This strategy emphasizes a long-term perspective, allowing for potential gains as Shiba Inu establishes itself above the resistance and continues its upward trajectory. Based on the provided price information for Dogecoin, a bullish investment strategy appears promising. The 2-week price history demonstrates an upward trend, with the price hovering around the 40 cents level. The forecast predicts continued growth, with prices potentially reaching $0.521 within the next week. This suggests a favorable market sentiment and potential for capital appreciation. Therefore, an aggressive short-term investment strategy would involve taking a long position on Dogecoin. A suitable entry price would be around 40 cents, aligning with the current market price. The stop loss should be set at 38 cents to mitigate potential downside risk. The target price could be set at 50 cents, aiming to capitalize on the predicted price surge while leaving room for potential fluctuations. This strategy leverages the positive price momentum and forecast, aiming to generate short-term profits from the anticipated price increase. Given the price trends and forecast for Hooked Protocol, a medium-term investment strategy appears most suitable. The historical prices demonstrate an upward trend, with the recent price hovering near the support level of $0.4774. The forecast suggests continued upward momentum, with prices potentially reaching $0.536 over the next week. This indicates a bullish outlook for Hooked Protocol in the medium term. Therefore, a long position is recommended. An ideal entry price would be around 48 cents, slightly above the support level, allowing for a buffer against potential short-term fluctuations. The stop loss should be set at $0.4774, the support price, to minimize potential losses. The target price could be set at 53 cents, aligning with the highest forecast price and offering a reasonable profit margin. This strategy capitalizes on the expected price appreciation of Hooked Protocol while managing risk through a well-defined stop loss. Based on the provided data for Aevo, a bullish investment strategy appears most suitable. The historical price data reveals a general upward trend, with recent fluctuations around the 35 to 40 cents range. The forecast price suggests continued growth, reaching up to $0.497 within the next week. This positive outlook, coupled with the current price hovering near the support price of $0.4073, indicates a potential for further upward movement. Therefore, an aggressive investment strategy would involve taking a long position in Aevo. A suitable entry price would be around $0.4073, aligning with the support level and providing a good entry point for potential upside. The stop-loss order should be placed at $0.399, slightly below the recent lows, to minimize potential losses. The target price could be set at $0.492, the resistance level, aiming to capitalize on the full potential of the forecast price increase. This strategy allows for potential profits while managing risk effectively. The provided price information for Coin suggests a potential for short-term gains. The historical price shows a fluctuating trend with recent upward movement, currently near the support price of $0.008439. The forecast price indicates continued upward momentum, with prices projected to reach $0.00985 within the next week. This suggests a bullish outlook for Coin in the short term. Therefore, an investment strategy for Coin would involve taking a long position. A suitable entry price would be around $0.0085, aligning with the forecast price and providing a small margin of safety above the support price. The stop loss should be set at $0.0084, just below the support price, to minimize potential losses. The target price could be set at $0.0095, allowing for a reasonable profit margin before the price potentially reaches the resistance level. This strategy capitalizes on the anticipated upward price movement of Coin while managing risk through a well-defined stop loss. Given the price trends and forecast for Coin, a medium-term investment strategy appears most suitable. The historical price data shows a consistent upward trajectory, with the current price hovering near the support level of $0.02318. The forecast suggests a continued upward movement, with prices potentially reaching $0.0255 in the coming weeks. This indicates a bullish outlook in the medium term, making a long position the most advisable strategy to capitalize on the anticipated price increase. An entry price of $0.0233, slightly above the current support level, would allow you to enter the market while minimizing the risk of a sudden drop. The stop loss should be set at $0.0225, providing a buffer against unexpected market fluctuations. The target price should be set at $0.0250, aiming to capture a significant portion of the anticipated price increase. This strategy balances risk and reward, allowing you to potentially profit from the upward momentum of Suncoin in the medium term. Based on the provided information for Pepe, a short-term investment strategy focusing on a long position appears promising. The historical price data demonstrates a fluctuating trend, but the recent price movement suggests a potential upward trajectory. The forecast indicates continued growth, with prices projected to rise above the current levels. The support price at $0.0000187 provides a safety net, while the resistance at $0.0000203 suggests an attainable target. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price, around $0.0000201. A stop loss could be set at $0.0000188 to mitigate potential losses. The target price should be set at $0.0000206, aiming to capitalize on the forecasted price increase while staying within a reasonable risk-reward ratio. This strategy leverages the anticipated upward momentum and aims to secure profits within a short time frame. Given the price trends and forecast for Toncoin, a medium-term investment strategy would be suitable to capitalize on the expected price increase. The historical prices show a consistent upward trajectory with recent price fluctuations. The current price is close to its support level of $5.981, and forecast prices indicate a potential rise towards the resistance level of $6.314. This suggests a bullish outlook in the medium term. A long position is advisable for this strategy. An entry price of $6 would allow you to buy in near the support level and benefit from the projected price increase. A stop loss at $5.90 would protect your investment from significant downside risk. The target price should be set at $6.30, aiming to capture a substantial portion of the potential price movement towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the historical price data and the bullish forecast for Bitcoin Cash, a medium-term investment strategy appears promising. The price has shown a consistent upward trend over the past 2 weeks, with recent fluctuations hovering around the support level of $496.1. The forecast suggests continued growth, with prices potentially reaching $568 within the next week. This indicates a favorable market sentiment for Bitcoin Cash, suggesting potential for capital appreciation. Therefore, a long position is recommended for a medium-term investment strategy. An optimal entry price would be around $500, slightly above the current support level. A stop loss could be placed at $490 to minimize potential losses if the price unexpectedly reverses. A target price of $550, a conservative estimate based on the forecast, would allow for capturing a significant portion of the potential upside while managing risk. This strategy allows for capitalizing on the bullish momentum while mitigating potential downside risks. Given the price trends and forecast for Chainlink, a medium-term investment strategy focusing on a long position appears promising. The historical prices show a consistent upward trajectory, with the current price hovering around the support level of $17.629. The forecast suggests Chainlink could rise to $20 in the coming weeks. This indicates a bullish outlook in the medium term, making a long position the most suitable strategy to capitalize on the anticipated price increase. An entry price of $17.80 would allow you to buy in slightly above the current support level, while the stop loss should be set at $17.50 to protect against any unexpected price pullback. The target price should be set at $19.50, aiming to capture a significant portion of the forecasted price increase. This strategy balances risk and reward, allowing you to participate in the potential upside of Chainlink while mitigating potential losses. Given the price trends and forecast for Polkadot, a long-term investment strategy appears promising. The historical prices show a consistent upward trajectory, with the current price hovering near its forecast and near the support level of $8.379. The resistance is at $9.043, indicating that there is still room for upward movement. A long position is advisable to capitalize on the potential for a price increase towards the resistance level and beyond. For this strategy, an entry price of $8.50 would be ideal, aligning with the recent price highs and the forecast. The stop loss should be set at $8.30, slightly below the support level, to protect against any unexpected price reversals. The target price should be set at $9.50, allowing for a significant profit margin while still leaving room for further price appreciation. This strategy aims to capture the long-term growth potential of Polkadot, while mitigating risk with a well-defined stop loss and a conservative target price. Based on the provided information for Near Protocol, a medium-term investment strategy appears most suitable. The historical price data reveals an upward trend, with recent price fluctuations suggesting consolidation. The forecast indicates continued growth, with prices projected to reach $7.54 in the coming weeks. This positive outlook, coupled with the support price of $6.435, suggests a good opportunity for capital appreciation. Therefore, I recommend a long position in Near Protocol. A conservative entry price would be around $6.15, allowing for a margin of safety below the current price. The stop loss should be set at $6.40, safeguarding against a potential downward reversal. The target price should be $7.30, aiming to capture a significant portion of the anticipated price increase. This strategy balances risk and reward, capitalizing on the bullish trend while mitigating potential losses. Based on the provided price history and forecast for stacks, a short-term investment strategy appears to be the most prudent approach. The recent price history shows a slight downward trend, with the price oscillating around the $1.90 mark. The forecast suggests a further dip in price over the next week, with the price potentially falling to around $2.08. Given this outlook, a short position on stacks could be profitable. To execute this strategy, an entry price of $2.03 could be considered, aligning with the current price and the anticipated decline. The stop loss should be set at $2.06, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price could be set at $1.92, capturing potential profits as the price moves towards the forecasted lows. This strategy capitalizes on the short-term bearish momentum while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Aptos, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering around the support level of $12.28. The forecast suggests a slight upward movement in the coming week, reaching potentially $13. Considering this, a long position would be advisable. An entry price of $12.30 would allow you to buy in at a slightly discounted price, aligning with the support level. The stop loss should be set at $12.15 to protect against any unexpected price drop. The target price should be set at $12.70, which is slightly above the resistance level, allowing you to take profits before a potential pullback. This strategy capitalizes on the anticipated upward momentum while managing risk effectively. Based on the provided historical price data and the forecast for Litecoin, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a general upward trend, but with some fluctuations. The forecast suggests continued upward momentum, with prices potentially reaching $109 within the next 2 weeks. This indicates a bullish outlook for Litecoin in the medium term. Therefore, a long position is recommended. An appropriate entry price would be around $92, slightly below the current price, allowing for a small margin of safety. The stop loss should be set at $87, a level below the recent support price, to protect against any unexpected downward price movement. The target price could be set at $105, aiming to capture a substantial portion of the anticipated upward potential. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the price trends and forecast for Uniswap, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a consistent upward trajectory, with recent fluctuations suggesting consolidation around the $9.50 price level. The forecast indicates a continued upward movement, projecting prices to reach $10 within the next few weeks. This suggests a potential for capital appreciation in the medium term. A long position would be advisable to capitalize on this anticipated price increase. An entry price of $9.75 aligns with the current price range and provides a reasonable margin of safety. The stop loss should be set at $9.50 to protect against potential downside risks, while the target price should be set at $10.50, aiming for a profit of approximately 8%. This strategy allows for a balance between risk and reward, taking advantage of the projected upward momentum while mitigating potential losses. The provided historical price data for Bittensor reveals a fluctuating trend with periods of both upward and downward movement. While the recent price has been relatively stable, the forecast indicates a potential downward correction in the coming weeks. Considering this bearish outlook and the support price at $480.70, a short-term short position on Bittensor appears to be the most suitable strategy. To maximize potential gains while managing risk, an entry price of $520 could be considered, aligning with the current price and allowing for a margin of safety. A stop-loss order should be placed at $530 to protect against unexpected price surges. The target price could be set at $490, anticipating a decline towards the support level. This strategy capitalizes on the potential for a short-term price correction while minimizing exposure to significant losses. Based on the provided data for Internet Computer, a medium-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a fluctuating trend with a general upward bias. The forecast price suggests continued upward momentum, reaching $13 within the next week. This, coupled with the support price at $10.881, indicates a strong foundation for a potential price increase. Therefore, I recommend a long position on Internet Computer. An ideal entry price would be around $11, taking advantage of a potential dip near the resistance level. The stop loss should be set at $10.881, aligning with the support price, to minimize potential losses. The target price could be set at $13, aligning with the highest forecast price, allowing for a healthy profit margin. This strategy capitalizes on the anticipated upward price movement while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Artificial Superintelligence Alliance, a medium-term investment strategy seems appropriate. The historical prices show a recent upward trend, with the current price hovering near the support level of $1.486. The forecast suggests a gradual increase in price over the next week, reaching around $1.56. This indicates a potential for further gains in the medium term. Therefore, a long position is recommended for Artificial Superintelligence Alliance. A suitable entry price would be around $1.49, slightly above the support level, allowing for some room for price fluctuation. The stop loss should be set at $1.45 to minimize potential losses if the price drops unexpectedly. The target price could be set at $1.58, aiming to capture a significant portion of the forecasted price increase. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in the medium term. Based on the provided Optimism price data, a medium-term investment strategy appears most suitable. The historical prices show a general upward trend, with recent fluctuations suggesting consolidation. The forecast predicts continued growth, reaching $2.46 in the coming weeks. This indicates potential for capital appreciation. However, the price is currently near its resistance level, suggesting a potential pullback before further upward movement. Therefore, a long position is recommended, aiming to capitalize on the anticipated price increase. The entry price should be set at $2.15, aligning with the first forecast price. The stop loss should be placed at $2.08, slightly below the recent support level, to minimize potential losses. The target price should be set at $2.28, aiming to capture a portion of the predicted upward movement. This strategy balances risk and reward, allowing for potential profit while mitigating downside exposure. Based on the provided price information for Ethereum Classic, a bullish investment strategy is recommended. The historical price data shows a consistent upward trend, with the price hovering around the support level of $27.15. The forecast price suggests continued upward momentum, with predictions reaching $32 in the coming weeks. This indicates a positive outlook for Ethereum Classic in the short to medium term. Therefore, an investment strategy should involve a long position, aiming to capitalize on the anticipated price increase. A suitable entry price would be $28.50, allowing for a buffer above the current price and the support level. A stop-loss order should be placed at $27.15, protecting against any unexpected price reversals. The target price can be set at $30, providing a reasonable profit margin while leaving room for further potential growth. This strategy aligns with the bullish trend and forecast, aiming to generate returns in the short to medium term. Based on the provided Ethereum name service price information, a medium-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a slight upward trend, while the 1-week forecast suggests continued growth, albeit at a slower pace. This indicates a potential for gradual price appreciation in the coming weeks. Therefore, an investment strategy focused on a long position is recommended. A suitable entry price would be around $19.70, slightly above the current price and close to the support level of $19.42. This provides a margin of safety while allowing for potential price appreciation. The stop loss should be set at $19 to limit potential losses if the price drops unexpectedly. The target price could be set at $20.80, aligning with the resistance level of $20.53 and providing a reasonable profit target. This strategy aims to capitalize on the anticipated upward momentum of Ethereum name service while managing risk effectively. Based on the provided data for Solana name service, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a slight upward bias. The forecast predicts a continued upward trajectory, albeit at a moderate pace. This suggests that while Solana name service is likely to appreciate in the near term, the gains may not be substantial. Therefore, I recommend taking a long position with an entry price around $0.225. The stop loss should be set at $0.2236, the support price, to minimize potential losses. The target price could be set at 24 cents, aligning with the resistance level and allowing for a reasonable profit margin. This strategy capitalizes on the short-term upward momentum while managing risk effectively. The Aave price history shows a fluctuating trend with recent consolidation around the $160 to $175 range. The forecast suggests a potential upward movement towards $175 to $180 in the coming week, with support at $142.74 and resistance at $174.26. Considering this information, a medium-term long position appears to be a promising strategy. We can enter a long position at $165, a price point below the recent resistance, but above the support level. A stop loss at $158 would limit potential downside risk, while a target price of $178 allows for potential profit capture based on the forecast. This strategy capitalizes on the anticipated upward momentum while managing risk through a well-defined stop loss. Given the price trends and forecast for Injective, an aggressive investment strategy would focus on a long-term approach. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $25.84. The forecast suggests a continued upward movement, reaching as high as $30 in the coming weeks. This indicates a bullish outlook in the medium to long term, making a long position the most suitable strategy to capitalize on the anticipated price increase. An ideal entry price for this strategy would be around $26, aligning with the current price and allowing for potential upside. A stop-loss order should be placed at $25.84, protecting against a sudden drop below the support level. The target price could be set at $30, aiming to capture a significant portion of the forecasted price increase. This strategy allows for a balance between risk and reward, capitalizing on the positive price momentum while mitigating potential losses. Based on the provided price history and forecast for Polygon, a long-term investment strategy appears promising. The historical price data reveals a consistent upward trend, with recent fluctuations suggesting a period of consolidation. The forecast indicates further price appreciation in the coming weeks, reaching levels above the current price. This suggests a bullish outlook for Polygon in the medium to long term. Therefore, a long position is recommended. An entry price of 45 cents could be considered, aligning with the recent consolidation phase and providing room for potential upside. The stop loss should be set at 42 cents, safeguarding against significant price reversals. The target price could be set at 60 cents, based on the forecast and historical price trends, allowing for substantial profit potential while acknowledging the inherent volatility of cryptocurrencies. This strategy capitalizes on the bullish momentum and long-term potential of Polygon, aiming for significant returns over a medium to long-term investment horizon.